Now, the crypto markets, let's touch base on Bitcoin here, because I'm sure everyone's wondering about that. The crypto charts continue to languish. And what I mean by that is you now have a potential breakdown of this little mini bear flag right here with a short-term target of around 21,500. So we're only about $500 away from that. That would be your short-term support. Now, again, this is only a minor support. Now, this is going to be a little education I'm going to throw at you guys. All right, so what we know is that this line connects through here, which then connected through here, which then connects right through this area. Now, a lot of people think this is major support. Why? Well, this was the pre-FTX high. It collapsed. Here was your FTX high resistance, pulled back, broke out, and hit. Now, in essence, it is going to be support. So 21,500 is support. The reason I classify it as minor support versus major, and by the way, the difference between minor and major, this is important. Major support, you expect a big bounce and a significant amount of time that the chart bounces off of that level. So it could be a month, it could be 3 months, it could be something like that. Minor, you expect a smaller bounce, so you still expect a bounce, right? I mean, that's why it's still called minor support. But again, the key is minor support, you get a small bounce and it only stays above the level for a short amount of time. So again, that's the difference between major and minor. People are always asking me about the difference between major and minor support, or resistance, by the way. So this is minor. The reason it's minor is you just hit over here and you got a bounce. It wasn't even that big of a bounce, and then you came in. The other thing I want to point out to you guys, and this is a little spooky, look at this formation, all right? And I showed this in my daily analysis video yesterday, as well at inthemoneystocks.com. But if we zoom out here, look at that pattern. Does that look similar? So again, look, it's a mini-me of the bigger pattern. And so what part of technical analysis is recognizing the similarities of charts. Now, you don't necessarily, if there's no guarantee it plays out the same way, but in general, it's a probabilities game. And always remember that. So if you have a chart set up that did something in the past, and if you look at past chart setups that, 9 out of every 10 times it does, A, B, and C, well, then what you do is you say, okay, well, probabilities dictate I'll get the same ABC move. All right. Now, again, it doesn't guarantee it because you're only getting probabilities of, let's say, 70, 80, or 90%. But again, it puts you in a position to be the house of the casino versus the gambler. And we never want to be the gambler, right? I mean, the bottom line is the gambler is ultimately you play long enough, you're going to lose at the casino. It's just the nature of the beast. Okay. So short-term support on Bitcoin remains at 21,500. If that breaks, you have this little pivot low right here around 20,400 or 500. Ultimately, I'm still anticipating a fall to about 18,000 and change. So we'll see again when that occurs. But again, you do have two minor supports that you have to get through. The only thing that would change me bullish to a 30,000 target, you would have to take out this high pivot as well as this upsloping line right here. So basically, if you get through 25, 26,000, you should very quickly go to 30,000. Right now, the charts are not in favor of that. They're definitely kind of in the more downward bias camp.
In this video, professional trader Gareth Soloway is going to be taking us through how the crypto markets will perform short term and says to expect to see further downside. Gareth further points out some major patterns to crypto in the stock market. Make sure you stick around to the end of this video to see him reveal some of the best kept secrets and strategies for making money in these markets. And also only a small percentage of you guys are subscribed, so make sure you guys smash that subscribe button if you guys enjoy finance content.
Yes, we can take a look at Solana real quick. Let's take a look at Solana. I am short in verified investing alerts. Solana, love the breakdown. We're short from north of like 25 bucks here. So we are deep in the money on this. The next support you're going to have is going to be right here. Let me mark this off for you guys. All right. And I'll show you where I'm going to actually buy Solana. All right. So here's your next support around 1750, 1775. And then after that, where I would buy it would be right in here, right around 1465. Basically, a Pierce of 15, I would start to get long Solana. All right. So again, that's a good one to look at. Let's take a look at Matic real quick. Then we'll do a few stocks as well. By the way, stock-wise, there's not a ton of big movers today. We'll touch base on a few of them in just a minute. You can see again, Matic is starting to break down. I have a key buy level on Matic around $1 or just above right here. See this major support area right here? That's going to be a good buy on Matic. If it breaks through, so number one, I'm not going to buy everything that I want to buy here at the first level. Why? Because there's a dual support level. Look at the trend line, look at the flat line right there. That's going to be my secondary buy. That'll be where I double up on the position. And again, the key is I'm not going to buy a full position to start. Honestly, I'll probably buy like a quarter of what I ultimately want to own at a buck-ish, give or take. This will allow me to maneuver and trade. And by the way, one thing to keep in mind is that the best traders in the world enter stocks expecting to potentially be wrong. Now you might say, wait a minute, a good trader enters a trade expecting to be wrong. How crazy is that? Well, that mentality actually gives you the ability to maneuver and trade around the position and ultimately make money on a higher percentage of your trades. Retail, the newer traders, what do? They go into a trade and they say, this is a no-brainer. Let me throw my whole account in this trade. And what ends up happening? It goes against them and they don't have any additional capital to maneuver. They're over leveraged. So when you can change your mindset to going into a trade and almost expecting to be wrong, you will actually find that you make more money than you did prior to that mentality. It's an amazing kind of weird way of thinking, but it's a money making way of thinking. No one's a genius. Don't ever let let a trader tell you that they know everything. No one knows everything. I don't know everything. Yes, I was short this stock. We made money when it fell, but I again covered way before it got down to the $40 to $50 range. But again, that brings up another important point. You don't have to always maximize your gains. When you try to always get a little bit more out of a trade, you're inevitably going to be wrong sometimes, and it's going to reverse on you, taking away your gains. Don't be so focused on, oh, I missed selling at the top, or oh, I missed shorting at the bottom, or whatever it is. Make your mentality start to say to yourself, okay, just rack up wins. I want singles and doubles. For those of us that are baseball players, we want to remember, we want to get to the Hall of Fame without lots of strikeouts. In this game, home run hitters, yeah, sure. Home run hitters in baseball, and again, some of you guys aren't from the US, that may not make as much sense, but home run hitters in baseball, they strike out a ton, which means they're out, they're done every time they strike out. Like, I remember back in my early days, even though the steroid issues kind of came up, but you had Barry Bonds and Mark McGwire and Jose Canseco, all, by the way, steroid players. But well, I digress from that. But the bottom line is they always struck out a ton too. They always struck out a ton. And that's not okay in trading. You don't want to strike out. When you strike out, you lose big. So what I want to do is I always try singles and doubles. I want to win it at 80% to 90% clip. And I'm just taking small gain, small gain, small gain, small gain. And that ultimately will help me make millions of dollars and has helped me make millions of dollars in the trading world and actually launch the hedge fund. I mean, everything that's come about that has been my change in mentality from ultimately going from this mentality of, oh, I got to hit a home run and make 100% on this trade to, you know what? Aim for 10%, sometimes 15, sometimes 5%. Aim for 10%, grab it and run. And what's crazy about this, and I discussed this with my trader buddy in the office, Ben, who's going to start doing some of these broadcasts with me. But we always find that when we take 10%, oftentimes the stock comes back down or the crypto comes back down, and we get to buy it at the same price that we initially bought it at, even though we banked 10% on it. Sometimes even a better price. And sometimes it works out more often than not that way because markets very rarely go straight up and straight down.
The two key strategies that I want to point out from this video that Gareth talked about is, first thing, you're going to want to follow the whales or the smart money. And the second thing that Gareth pointed out is that you don't always want to expand your gains where you're thinking that this stock or asset is just going to continue to go up, 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 and up, because there's always this saying of what goes up must come down. So you got to pay attention and make sure you're taking profits when you can. Little 5% here, little 10% there. Little gains along the way, more multiple little gains will keep your portfolio successful.